So when I talk about orthodox investing, I'm talking about the correct way to invest. In other words, how do we reason correctly, or how do we think logically to arrive at smart investment decisions? The motivation for creating this video is that a lot of people today have lived through the two great bubbles that we had this century. In other words, the 2000 dot-com bubble and the housing bubble, the United States housing bubble of around 2005. And when we look at what happened in these instances, it seems very obvious in hindsight, right, that it's very foolish to buy insanely overvalued stocks or insanely overvalued real estate right at the peak and expecting them to continue rising in value. And so a lot of people, including myself, are convinced that if we just take the time to think about these things, then we can predict the financial markets, at least the major things, the major bubbles, the major events that happen. I do know that after the next major financial event occurs, it will be too easy for everyone to say that they saw it coming all along. And so I want to do it ahead of time. I'm going to publish these videos saying as concisely as I can how one should invest intelligently, and then later on it will be easy to see whether I was right or wrong. Now, I know that a lot of listeners may be thinking to themselves that predicting financial markets is clearly extremely difficult, and people who do get it right are, to a large extent, simply being lucky. And I would strongly advise against adopting this point of view for the simple reason that when we think about how people have lost a lot of money in the recent past, it's precisely the lack of arrogance, the unwillingness to say that you are smarter than everyone else, that was the culprit. So, for example, during the dot-com bubble, it was the unwillingness of somebody to say that this is crazy, that technology stocks are overvalued, that would have caused them to, lose money, possibly a fortune. The same thing happened again during the housing bubble, and even more recently in 2012, at a time when it seemed like crude oil at $90 to $100 a barrel was the new normal. Very few people were thinking about a collapse in oil prices, and yet that is exactly what happened. Today, crude oil trades around $40 to $50 a barrel, and there's no sign of a substantial pickup anytime soon. So, in other words, a lot of people who invested back in the days of $100 oil lost very substantial amounts of money. If we look at how things in the oil industry unfolded in hindsight, it all seems pretty obvious. At least not obvious that it happened exactly as it did, but at least it should have been obvious that there was a huge risk that overcapacity would result as a result of the shale boom in the United States. So for these reasons, you want to assume that everybody else is an idiot, and only you are the only brain around, because I have just mentioned 3 examples in very recent history where people ended up getting screwed by not making that assumption. And it all could have been easily prevented.